outside of the US, it's actually one of the largest insurance products in the world outside of the US. Statistically, 1 in 2 men and 2 in 5 women will develop a critical illness in their lifetime. Dr. Bernard used to say, the operation was successful, we've repaired your heart and removed your wallet. And sadly, that's true. If you look at GoFundMe, the campaigns there and the bankruptcies and stuff like that. So critical illness insurance ensures that you keep your wallet and your financial security intact while you recover. This episode of The Benefit Whisperer is brought to you by Route 3 Insurance and Financial Services, where smarter benefits begin. If you're tired of rising healthcare costs and opaque insurance contracts, Route 3 is here to help you take control. They specialize in transparent, employer-driven benefit strategies that protect your people and your bottom line. Ready to break away from the status quo? Visit www.fixmybenefitsnow.com and discover how Route 3 can help you build a plan that actually works for your team and for your budget.
And welcome to the Benefit Whisperer podcast with your host, Ralph Weber. Ralph, good to see you again. How are you?
Good to see you too, Bill. I'm really well, thanks. Just got back from holidays and I'm feeling refreshed.
Very good. Good. If you go on a holiday and you don't come back refreshed,
yeah,
there's something went wrong somewhere. Something went wrong. Yeah. Well, you're back in time to talk about a topic that when you sent it to me, I was like, what is that? And that is critical illness insurance, which, Ralph, I am going to be all ears for, because to be utterly honest, I've heard of all kinds of insurances, but I do not know what critical illness insurance is, nor why it was even created. So can you please tell me what we're talking about today?
Yeah, absolutely. So let me start by saying who created and why. Okay, it was created, and I've mentioned this name before on the podcast, by Dr. Marius Bernard.
Okay, yeah, we know that name.
Marius Bernard and his brother Christian Bernard performed the first successful person-to-person heart transplant in December of 1967 in South Africa.
Yes, okay.
Prior to that, when somebody would have a heart attack, they would die. Somebody was diagnosed with cancer, kidney failure, etc., and that was it. Life expectancy was much lower. I mean, 100 years ago, life expectancy was 47 years old. And now it's, about 80. So it's almost doubled in about 100 years. And with that, there have been more critical illnesses. Okay. The cause of death 100 years ago, the biggest cause of death was influenza. So what happened, Bill, is when you have a family unit and you set up your financial plan, okay, and if the traditional family where one spouse is at home and one works, then the spouse that is at home and doesn't work needs some financial protection should something happen to the breadwinner, right? So they would get life insurance. They died. The spouse would get the life insurance, pay off the mortgage, replace income, et cetera, et cetera. That made a lot of sense. So the problem that Dr. Bernard saw is that when people would come back to him for their follow-up in 6 months, 9 months, they would be angry. And he would ask them, he said, what's wrong? I did a heart transplant. You're alive because of it. You wouldn't be if I hadn't. Why are you so angry? And then they would say, the patient would say, you fixed me physically, but financially, you ruined me. Now, the Hippocratic Oath says, first, do no harm. And Dr. Bernard believed that includes do no financial harm.
Right.
Dr. Bernard used to say, the surgery was successful. We repaired your heart and removed your wallet. So, and that's very true. I mean, we've talked before about medical bankruptcies. Every minute in the US, a new family declares bankruptcy. Now, it's not just due to the medical bills, the hospital billing. It's due to a number of things. And when you have a heart attack, cancer, stroke, a critical illness,
yeah,
today's technology, chances are you're going to survive. However, chances are you're not going to work for a while. Chances are you'll have to change your lifestyle. Chances are you'll have to have less stress after. Chances are your partner might take some time off to take care of you and lose income. So there are so many things on top of just the medical bills. And, bankruptcies, as you know, more than half of bankruptcies in the US are due to, health-related causes, healthcare, bills, etc. Dr. Bernard discovered that only 7% of bankruptcies are caused by death. However, more than 50% are caused by serious illnesses. So he had to develop a product that protected somebody's financial life.
Oh, yeah. Because I'm sitting here thinking, wait a minute. Yeah, if you can have health insurance, you can have
Mm-hmm.
life insurance. Typically, if you're working for a large company, you're going to have disability insurance,
Right.
and which doesn't replace your income for life, but it replaces it for a declared period of time, typically 3 months, 6 months, whatever it may be.
Right.
And I was wondering, like, why would these people go bankrupt if they're insured and really well insured? And you just made that clear.
Yeah. Well, 3/4 of those bankruptcies are people that have good insurance. So it's not just the medical bills, although that's a huge part of it. Okay. Don't get me wrong. But sometimes disability insurance, it usually has a waiting period. Maybe, a lot of policies, you have to wait 3 months before it kicks in, for example.
Yeah.
If you have a heart attack, you are not, most of the time, you're not considered disabled after 3 months, and, who replaces the income in those 3 months. So critical illness insurance fills a gap that's not filled anywhere else. Disability won't cover it. Good health insurance won't cover it. Life insurance won't cover it. So that's why this was developed. You can use it to do anything. And the way it works, Bill, is like life insurance. You decide how much you need. You need $10,000, 50, 100,000, $1 million worth of critical illness.
Okay.
And most policies will pay immediately upon diagnosis of one of 10, 15, 20 illnesses, and it pays you a lump sum of tax-free cash immediately. Some policies actually pay 3 times, and most policies give you a complete return of premium if you die of other causes. So if you've got this policy for 10 years, you're paying premium for 10 years, you get hit by a bus, then obviously your beneficiary would get 100% of premium back.
Well, this is interesting. So, well, maybe this becomes a little clearer in my mind if you could tell me, give me some examples, perhaps, Ralph, of how families or business owners have used this particular product.
That's a great question. Some use it to cover their mortgage payments. Okay. So, and sometimes a very good example, we talked about disability insurance. If you have 2 spouses and one is working and one is not, the one that's not working, if that person develops a critical illness, they don't have disability coverage, nothing's going to pay them back, but the working one might take time off, okay, to be with his or her partner. So this policy will pay upon diagnosis. So it replaces income, it can pay the mortgage. And for business owners, it's very interesting because when, let's say 2 people own, let's say you and I own a business together, okay? ABC Widgets, okay?
Yep.
Bill and Ralph, we're 50-50 owners. Company's worth $2 million. So our individual stake is $1 million each, okay? Now, most business owners have what's called a buy-sell agreement in place so that if I die, you get $1 million of life insurance from me, you give it to my widow, and you say, hey, I'm buying out your husband, here's the money, so she gets the value of the policy.
Okay.
Now, if you have a critical illness, what happens? Now, there's also something called disability buy-sell insurance, but critical illness, what it does, and the way I like to structure these deals, and using that same scenario where it's 2 million, $1 million each. So outside of the life insurance needs, what I like to do is say, okay, Bill, we're going to buy these policies on each other, or the company's going to buy them on us, whichever way we structure it.
Right.
And if, for example, one of us is diagnosed with a critical illness, it'll pay, let's say $500,000. Okay. And the disability buy-sell insurance will pay another $500,000. So here's what happens. I have a heart attack. You get $500,000, which is 50% of my share, 25% of the whole company. So you come to visit me in the hospital, you bring me a box of chocolates and a check for $500,000. And you say, hey, Ralph, wow, what a bummer. Listen, I'm sorry that this happened. Here is $500,000. It's going to help you to recover. And it's going to buy me 25% of the total company, half of your share. Okay. Now we have to agree in advance what the valuation is and so on.
Yeah, I was going to say this is not a conversation that happens suddenly in the hospital room. You clearly have to plan this one, right?
No, absolutely. And it will then help you as the remaining business owner to replace what I was doing. Like maybe I was the sales guy, you were the ops guy. It's going to help you to replace that. So let's say I continue to be disabled because of this illness. 12 months later, the disability policy kicks in and pays another $500,000. Okay. And then you come back. By this time, I'm not in the hospital, but I'm, disabled, totally disabled.
Mm-hmm. Right.
You come by and say, hey, look, here's another $500,000, and then you have bought me out. Now, usually these agreements also include a buyback clause. So let's say the critical illness, you pay me the first $500,000. Let's say 6 months later, I get better and I come back to work. I can buy back my shares.
Gotcha.
Or I can say, you know what? I got to take it easier. I'm totally okay with being a 25% owner instead of 50.
Interesting. So I can see really easily how like this kind of policy would fit really neatly into succession planning,
yes,
and continuity planning, because that you're already walking us there now, as it were.
Mm-hmm. Yes. Yep. Absolutely. It is essential, Bill. It's something that outside of the U.S., it's actually one of the largest insurance products in the world outside of the U.S.
Oh.
In the U.S., it isn't, interestingly enough. And, part of that is because of our medical system. We pay so much in premiums just for our health insurance.
Yeah.
We're saying, hey, look, we're paying so much, like, why should we have to pay more? This should take care of it. Well, it doesn't.
No, it doesn't. So what do the statistics say about age in this? Because I can see, like, let's say Bill and Ralph form ABC Widgets, and we're both like 32, 33 years old. I remember when I was approached in my 20s by a life insurance salesman saying, you're going to need this one day. And I'm like, yeah, right. One day, whatever you say, whatever. Yeah.
Right.
So you want me to give you a bunch of money so you can go do nice things, and I got to pay you all that money, and I just didn't see the wisdom of it. But what do the stats say in terms about age? I mean, is there such a thing as being too young for this?
No, actually there isn't. Statistically, 1 in 2 men and 2 in 5 women will develop a critical illness in their lifetime.
Wow.
Okay. So that's pretty high. The average age of claim, interestingly enough, is 42 years old.
No.
Yeah. So it's not something, and you just gave away our ages. I didn't want anybody to know I was 32, but now they know that I'm 32 and you're 35. So
exactly. I'm the elder statesman in this relationship. That's right.
And I personally, I've got $500,000 of critical illness insurance on myself. Okay. Because I believe in the product. So, also, if you buy it when you're younger, Bill, you lock in your premiums at a lower age.
Oh, nice.
Okay. And it gets fixed. Yeah. So that's also the advantage. And as I told you earlier, most of them will have a return of premium provision. So, yes, you're paying money out, but eventually it's going to pay out one of 2 ways, either upon diagnosis or upon death from other causes. So it's kind of a no regrets policy.
Oh, interesting. So if somebody's listening to this and thinking this is an interesting product that I didn't know anything about, what should they look for if they're going to begin this search and begin exploring different kinds of critical illness insurance policies?
Well, they should, number one, talk to a licensed advisor that's knowledgeable about these products. Now, today, many life insurance policies have what's called an acceleration rider, a critical illness rider. So, for example, if you've got $1 million of life insurance and you're diagnosed with a critical illness, it will advance you part of that $1 million. Okay. Now, that's better than nothing. However,
Right.
if you have $1 million of life insurance because you calculated that you have to pay off your mortgage, pay the surviving spouse support for so long, put the kids through college, et cetera, et cetera. If that was the amount you needed, if it pays half, for example, upon diagnosis, then you die, there's not enough left. Okay. So like I said, it's better than nothing, but it doesn't really do, it doesn't serve the whole picture. So the critical illness, you have to look at as a separate policy. Okay. You have to look at, do you have enough to cover the mortgage? Now, you don't necessarily, life insurance pays off the mortgage, but critical illness, because 80% of people survive a critical illness, it just makes your payment for a year or two or whatever you feel is correct. So
Okay.
It can cover loans, business cash flow, things like that. So you have to also look at the coverage. What is the coverage scope? What are the terms? When, if ever, does it expire? What happens, et cetera. So, and also the waiting period. Like I said, most of them in the US pay off immediately. In Canada, there's usually a 30-day waiting period. You have to have the critical illness and then wait a month before you get it. So look at that as well. So, generally, looking very seriously at your financial obligations and calculating, from there, how much you would need in the event of a critical illness.
Yeah, this is an interesting product, and it does make a pretty good case for it. And it also makes a pretty good case for the fact that it's like it's part of the fabric of your entire financial plan. So it would seem important that, when you are looking at these policies, you are speaking with either your financial advisor or your insurance provider for other products to make sure all of these things work together like you're talking about.
Yeah. And as I said, there are a lot of financial advisors in the US that don't know a lot about this product. Okay. And they might say, oh, that's kind of like a worksite product or something like that, which is also offered as a worksite product. But if they're not knowledgeable,
right,
then you need to reach out and find somebody that does. So, like I said, it's very misunderstood in this country, what it does and why.
Well, are you somebody that people could reach out to if they're listening to this podcast and are thinking?
Absolutely. And, also if you are an insurance agent, you want to learn more, I'm happy to talk to those people as well. And you can always call me at 832-924-3330, or you can go to fixmybenefitsnow.com, or of course, thebenefitwhisperer.com. So there are a lot of ways to reach me.
That's great. That is great. And I would encourage any of you who are listening to this podcast and thinking this is intriguing and I need to learn more about this product, do in fact reach out to Ralph. He can in fact help you, as a matter of fact.
Yeah. As we've discovered, it does something that no other policy does. Okay. Health insurance pays the doctors and hospitals and drug companies for most of your treatment, as long as it's not declined. And that happens a lot too. Disability insurance, after a waiting period, replaces part of your wages. Usually it's limited to 60% of your wages. Okay. And if you can survive on 60% of your wages, then that might be enough. Okay. But most people can't. Most people, budget for 100% of their wages. So it can fill that gap. It can fill the waiting period. And as I said, Dr. Bernard said it the best. If you are diagnosed with a serious medical illness, a critical illness today, chances are you will survive. Okay. But will you survive financially? So, it also doesn't, health insurance also doesn't cover lost income, mortgages, other living costs. So there are really a lot of things. And the fact that it was created by a doctor, by a physician, instead of a bunch of actuaries, that to me is hugely important. And Dr. Bernard, I met him several times before he passed away. Great guy, absolutely fabulous, knowledgeable guy. And I really credit him for what he did.
I, at the beginning of this conversation, knew nothing about critical illness insurance. And this has been an illuminating conversation for me because, I'm thinking, I've got life insurance. I've got health insurance. I mean, I've got car insurance. I've got home insurance. I should be fine. There's no problem here. I'm insured. But there is that weird hole where it's like suddenly I have a heart attack and I don't die.
Mm-hmm.
But the doctor's like, you can't go back to work for probably 6 to 8 months.
Exactly.
And when you do, you're going to have to go back on a reduced basis because it was a serious event.
Right.
And like suddenly we found the big hole. We found a big hole, as a matter of fact.
Usually you can't go back at 100% of where you were before. You go back at a limited capacity, just as you've spoken. This kind of insurance, what it does is it insure, as I said earlier, Dr. Bernard used to say the operation was successful. We've repaired your heart and removed your wallet. And sadly, that's true. If you look at GoFundMe, the campaigns there and the bankruptcies and stuff like that. So critical illness insurance ensures that you keep your wallet and your financial security intact while you recover.
Yeah. Yeah. And again, if you are a small business owner or a medium business, if you're any kind of business owner, it makes a ton of sense for you to look at this, especially in regards to your business and maybe the partners that you may have with you in that business. So again, do reach out to Ralph. Okay. And with that note, and I'm assuming you already clicked the follow button and you're now a certified subscriber to the podcast, I want to thank you for listening today. I'm Bill. That's Ralph. And we want to thank you for coming on and listening to the podcast. And I am sure we will catch you on the next episode. Take care.
Thank you for listening to the Benefit Whisperer podcast. Click the follow button to be notified when new episodes become available. Looking to reach out? Visit our website at www.thebenefitwhisperer.com or give us a call at 832-924-3330. And don't forget to click the follow button to be notified when new episodes become available. The information covered and posted represents the views and opinions of the guest and does not necessarily represent the views or opinions of the Benefit Whisperer. The content has been made available for informational and educational purposes only. The content is not intended to be used as a substitute for professional investing advice. Always seek the advice of your financial advisor or other qualified financial service provider with any questions you may have regarding your investment planning.